Inflation's back, hotter than expected, and our favorite stablecoin barely flinched. Let's go. The Fed's boxed in again, rate cuts are on deck, and the money printers are warming up their engines, triggering the same migration pattern we've seen every cycle before. Some call this the new era of sound money. Others say it's deja vu from the 70s when inflation refused to die and hard assets went vertical. As governments and institutions pile into hard money, maybe the days of 3 green years, 1 red are over. Or maybe the real story here is that we've misunderstood cycles all along. And this time, the Fed is adapting, institutions are chasing, and Baron Trump's whispering in Dad's ear to stack the only asset that might just break the game.
Is that tax money that the Fed is spending?
It's not tax money. The banks have accounts with the Fed much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively, and we need to do that because our economy is very weak and inflation is very low.
Breaking! The dollar is actually backed by numbers on a screen, and we're all getting robbed. When fiat weakens, scarcity becomes our financial sanctuary, but this time, the rotation isn't following the familiar 4-year halving rhythm we've come to expect in Bitcoin markets. It's tracking liquidity itself, that is, the amount of money being printed in circulation. It goes like this. The money supply, or as the suits like to say, M2, expands. Inflation rises. Then capital runs away from bonds and treasuries and into hard assets. Watch what Bitcoin icon Michael Saylor has to say in this clip.
Where you said you were sitting on, what, a $500 million melting ice cube. Why do you see it like that?
Well, you know, for the last decade, I didn't pay much attention to macroeconomics. And I just thought of it as we had a conservative treasury policy and we had $500 million or more, and we're going to generate 2 or 3% interest on it, and we'll use it when we need it. But of course, over the past year or so, that interest rate went from 2 to 0. And then everybody woke up to the world of macroeconomics this year because we had the largest intervention of the Federal Reserve maybe in the history of the country. Right. And that drew me into a deep dive, and I started studying the expansion of the monetary supply, and I realized that for the past decade, the monetary supply has been expanding by 7%. And the actual inflation rate on assets is not 2%. The inflation rate on assets is 7 to 8% if you were holding equity, and the inflation rate on a bond is 22% if you were holding the long bond. And now I realize that the estimate for the next few years has got to be 10% or more. And so when you start thinking about your cost of capital being 10% and you're holding 500 million in cash that's yielding 0, I realize my real yield is negative 10% at least for the next 3 years. And so I imagined $150 million getting burned or melted away, and it made me very anxiety-ridden.
When inflation hits, capital has to go somewhere. If not, time consumes its value. First, it hides in gold, the safe, analog trade. Then, once gold peaks and starts to cool off, Bitcoin seemingly wakes up. Gold is the warm-up act that starts to shake up the markets. But Bitcoin is the main event. Hot, all-consuming lava.
Liquid hot magma.
You know, he kind of sounds like Trump there, but I digress. Let me explain why Bitcoin eventually wins. For years, everyone's tracked the Bitcoin halving like it was the gospel.
I feel a spirit! Woo!
If you're not familiar, it's an event in Bitcoin's code that cuts the reward miners receive in half roughly every 4 years, intentionally slowing the creation of new Bitcoin and reinforcing its scarcity. The most recent halving happened in April of 2024, and typically there is a Bitcoin bull run for 18 months after. This was supposed to be our year! But the truth is, halvings don't seem to be the only factor moving markets anymore. Lately, it's actually the central banks who have been furthering the cause of their own demise. But if we zoom out of the online echo chamber, every major Bitcoin bull run has lined up with one thing: money printing. This happened in 2013, 2017, 2021. Every time the money supply grew, Bitcoin followed. So if you're still watching block rewards instead of the balance sheet, you're missing the real signal. And here's where it gets interesting. If you pull up the historical charts, you'll notice a striking pattern. First, gold tends to make its big move. Okay, we passed that. Then Bitcoin and gold prices fall a bit. That's where we are right now. But right after, Bitcoin looks like it explodes. In his thread, former gold bug turned Bitcoin maxi Alex Stanzik connects the dots. He says Bitcoin had hit a 17.83% correction exactly on the day, October 9th, when gold hit an all-time high. Then he continues saying that he is still of the view that would have been a great day to rotate, even with the difference in gains in gold. And yet, he says, I still believe Bitcoin will massively outperform gold over time. Why? Because gold is not absolutely finite. It increases in supply by roughly 1.5% a year. Bitcoin is absolutely finite. And like clockwork, everything I've just said has come to fruition in the last few days. Gold price has just plummeted after its strongest run in years. And historically, like I said, that's been the tell. That drop could be the spark that signals the next phase of this migration from analog scarcity to digital inevitability.
There's two things that can happen. First principles. Bitcoin follows liquidity very closely. So does gold. So does the stock market. These are all assets that expand and contract with the money supply. So, do you believe that the money supply is going to expand or contract in the near future? Well, looking at the markets and looking at the jitters and looking at the Fed funds, the Fed funds rate and Fed funds futures, listening to the Fed, seeing the employment data, seeing the different data that says that we're going to need to tap the brakes here on or actually hit the gas pedal here a little bit, pull our foot off the brake, and expand liquidity. Hearing all that, it sounds like we're going to expand liquidity going into the near future. The only question is, do we hit a hard downturn first? Well, I don't think we're going to. I think we're going to ease up on the brakes here, and we're going to continue to expand liquidity. So that means that there are two things that could happen. Either liquidity could contract to meet where Bitcoin is, and gold, or actually gold's run quite a bit, but liquidity can either contract to meet Bitcoin, or Bitcoin can catch up to that continually expanding liquidity. Now, I happen to believe that liquidity will expand ad infinitum forever. It will have drawdowns, but the line is up and to the right. It's going to continue to be up and to the right. The other thing is that Bitcoin typically lags gold in gold's move. We've seen it in a number of other events. And so Bitcoin's been lagging gold recently, and it will catch back up, in my opinion. So my strong opinion is that even if we do have a drawdown, it's just temporary. Even if we do draw down to $100,000 or $90-something thousand, it's just temporary, in my opinion. And it's a buying opportunity, in my opinion.
Remember earlier when I brought up M2? M2 tracks the amount of dollars in circulation. Look at the correlation here between that and Bitcoin. Every time it spikes, Bitcoin does too, because this isn't a supply cycle anymore. It's a liquidity cycle. In this post, Jesse Myers says, the money printer hasn't run this hot since COVID. And the legend Larry Lepard reposted it with a quote tweet saying 12% annualized growth rates in global M2, far cry from the Fed's 2% target, and they haven't really even turned on the printer yet. Bitcoin launch coming. Wait for it. From your lips to God's ears, Larry. When they print, everything floats, but Bitcoin has historically risen the highest. When they tighten, everything sinks. Bitcoin, however, has historically settled at a higher floor than previous bear markets. This time, we seem to be observing that behavior again. Gold's running. Bitcoin is lagging for now, but in time, it looks like the rotation is imminent. Keep this tweet by John Consorti in the back of your mind. A 2% capital rotation from gold to Bitcoin would send it to 165,000 instantly. Whoa.
Cycle doesn't seem to have played out. We're behind schedule. We should have had a bull run already, like a massive run up. And, we're down actually at the time of this recording. So I think this cycle, if you want to call it a cycle, is delayed. It might push into next year for whatever various reasons there are. But I think the nation state adoption is coming. We're pushing on a lot of fronts. Other companies and people are pushing too. There are concrete examples of what Bitcoin can do to benefit a country out there right now. The moves in the US, I think, have yet to propagate throughout the world. So Trump did create the SBR, but they haven't started buying yet. And we are talking with other countries to do the same. There are a few that have said they will create it. And I think it's all coming. It's really that these things happen very quickly. It's like literally gradually and then suddenly. And I think we're on the tail end of gradually and we're at the beginning phases of suddenly. And if you look at just the US alone, they're pushing forward on a lot of their budget neutral Bitcoin acquisition and the Bitcoin Act too. So I believe it's simply a matter of time before we see a massive run up and we see a massive nation state FOMO panic.
The way I've seen it and the way you've heard it in multiple Bitcoin podcasts, live shows, and interviews, the end of cycles, as we know, is upon us. Big government, big institutions, and big banks have arrived to the Bitcoin landscape at large. I don't think we're going to see the same playbook repeat after this turning point. Those in power are now naturally incentivized to keep accumulating for two reasons. One, to reduce the volatility, and two, to stack more Bitcoin than their enemies. Remember, these people are vicious. The way I see it, this will be the modern Bitcoin cycle moving forward. Phase 1. The Fed cuts rates. M2 expands. Inflation rises. Phase 2. Capital flees to hard assets. Gold takes the lead. Phase 3. Bitcoin wakes up and steals the show. Phase 4, they tighten, liquidity dies, markets cool off until they print again. I know I'm just trying to be cute, but it's not random. It's the feedback loop that we've experienced since 1971. Except now, we have a modern day solution.
Modern problems require modern solutions.
And that solution is quickly catching on. We've hit that part of the cycle where liquidity meets conviction, and if you've been stacking for a while, this next phase is where miners, hodlers, and everyday stackers all line up on the same side of the trade. This is where infrastructure matters and incentives align, which is why you should check out Sazmining. Would you mine Bitcoin if it were as easy as buying it? Then you should check out Sazmining. It's not hosted mining, it's a mining service that actually puts Bitcoiners first. You can own a state-of-the-art mining rig, plug into affordable carbon-free energy, and stack Bitcoin just like Satoshi. No middlemen, no markups, no worries. Saz doesn't tack on extra fees when you sign up, and unlike other companies, there are no rig upcharges or inflated power rates. Their entire business model is based on a clean and simple revenue share. They only earn Bitcoin if you are too. A total alignment of incentives and 100% Bitcoiner values. While some claim simplicity, Sazmining proves it. Let's just say that if you need a compass to find your miners, you're not in the right place. This is how Bitcoin mining should have always been done. Visit sazmining.com or scan the QR code to learn more and start hashing. And if you're not mining yet, but you're already stacking, there's another way to make your Bitcoin work for you safely. If you're stacking sats, you need Bitcoin-backed services you can trust. That's why we roll with Ledn, the global leader in Bitcoin-backed lending. Ledn has issued over $9 billion in loans since 2018 and a perfect record of protecting client assets. Why is a Ledn loan different? Collateral is not lent out to generate interest. No credit checks, funds in 24 hours, no monthly payments, repay whenever you want, zero penalties. And their proof of reserves verified every 6 months keeps them transparent. Ledn lets you unlock liquidity without selling. Sign up through Simply Bitcoin for 25 basis points off your first loan. Learn more at learn.ledn.io/simply. Now let's get back to the show. Bonus segment. Here's where everything changes.
So you can use Venmo, but if someone is not using Venmo or is an international tourist walking right outside right now,
but right now if I have an iPhone and I want to message somebody, I mean, if I don't have WhatsApp and somebody wants to WhatsApp me, they have to get the WhatsApp app.
But you have text, which is universal, where you can actually communicate and reach out to anyone you want in the world with one simple addressing scheme, which is a phone number, which is human readable. And you can't do that with money. There's no universal protocol for money on the internet that actually enables value to be transported through the internet. So if you were to want to send money to one of these people, you would probably need to ask them for a bank account number. The bank account number would be in different format depending on where you are in the world. You would have to actually physically walk to a branch and pay $50 to do an international wire. And if it's after Friday, 5 p.m., tough luck.
And how big a business is that?
It's ginormous, right? It's trillions of dollars of transactions that transit through SWIFT and other payment networks.
Even the Fed is finally admitting that distributed ledgers and crypto assets are no longer in the fringes. Check out what Fed Governor Waller said in the opening remarks of their very first Payment Innovation Conference. Roll the clip.
Our panelists are engaging in integrating traditional financial payment rails with distributed ledgers, developing new products and services in the digital asset ecosystem, and leveraging AI in the payment system. It's worth noting that the firms engaged in these activities include banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system.
Sounds kind of bullish, right? Like they don't mention Bitcoin, but it seems like we're on the right track, right? But then came the real line. We are also looking ahead to use our own payment systems. Roll the clip.
We are also looking ahead, conducting hands-on research on tokenization, using smart contracts, and the intersection of AI and payments for use in our own payment systems.
Brother,
That's not Bitcoin adoption. That's a poor attempt to migrate to stablecoins and perhaps a CBDC, Lord help us. They're not joining the revolution, but they sure want to be on this side before it's too late.
If we're in a sovereign debt crisis, and I think we are, and if we're going to have a lot of inflation, I think we do, and if we're going to go to have a monetary reset, there are going to be real winners and losers. And you're not going to get a do-over. You know, you're not going to get a do-over. It's not going to be like, oh gosh, I missed it. Maybe I'll, I mean, it's like we could wake up one day and the government could say, we're going to a gold standard. We're taking the price of gold up to $20,000. Well, you either own gold and gold mining stocks or you don't. They're going to go up enormously. Same thing with Bitcoin. I mean, the U.S. could say we're going to do a strategic Bitcoin reserve and the Bitcoin price could triple. Well, if you don't have any, you don't benefit from that. So there will be, because of the risk of monetary debasement and the fact that there will be no do-over, I would just strongly encourage all of your listeners to have some allocation of their wealth into things that the government can't print. The government can't print gold, government can't print silver, government can't print Bitcoin, and the government can print dollars, and they're going to print a shitload of dollars. in my opinion.
And what does that mean for the future of liquidity this cycle? If the US moves to adopt a stable coin or launches a central bank digital currency, will markets skip gold and move directly to Bitcoin when the Fed inevitably decides to increase their supply again? Because if we know one thing is certain, whether the dollar is a piece of paper or a digital currency, the money printer will always go brrr. And before we wrap, Mining Disrupt is almost here and you don't want to miss it. The biggest Bitcoin mining event of the year is taking over Dallas, Texas, November 11th through the 13th. This may be the most important Bitcoin mining event in history. The biggest names in the industry, cutting-edge rigs, Bitcoin and AI integration, the signal you won't get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. Cycles don't just die, but they do evolve. The halving cycle became the liquidity cycle, and now the liquidity cycle is morphing into something bigger, the digital scarcity cycle.
If we look back to gold historically, society looks for a hard money, and what made gold a good money was the relative scarcity and the sort of inherent cost of extracting more, mining more that comes with scarcity. And so something which doesn't have any inherent scarcity effectively becomes similar to a share in a company managed by some officers of the company, or like a fiat currency like the US dollar or the euro, which is managed by a monetary policy committee. So I think it's very difficult to imagine that kind of currency, the old coins and so forth, reaching global acceptance as a new digital gold.
So when you see the Fed cut again or the M2 chart start to curl up, remember, that's not noise, that's signal.
Yeah, baby! That's what I've been waiting for!
That's it for today's show. As always, please like, subscribe, and share the show with your friends, especially the gold bugs. Turn your notifications on for some hot new signal from this girl right here, 2 days a week, and drop a comment down below. Thanks for tuning in to Simply Bitcoin's Satoshi. And as always, stack, slay, and stay bullish, baby.